Welcome back to the October edition of Ithought PMS Factsheet. We have had a rather flat month in the markets with a few days of choppiness. This has also been largely driven by the fact that we are seeing the second quarter results come out. The broader sentiment turned positive, supported by strong corporate results and stable macro indicators. Investors seem to be slowly shifting back to quality as markets consolidate near their highs. At Ithought, we continue to stay focused on our central principle: owning good businesses, staying patient through cycles, and allowing time to compound returns. Each of our PMS strategies continues to follow its disciplined path, built on research, prudence, conviction. So first up, we have Solitaire, which is the quiet compounder. As we all know, Solitaire has been our flagship multi-cap strategy, and it delivered a 1.19% return in October versus 4.27% on the S&P BSE 500. While the broader market saw a rebound, Solitaire's selective positioning ensured stability. Over the last 2 years, the portfolio has compounded at a 17.4%, and since inception in August 2019, it has maintained a strong 22.4% CAGR. With over 75% of holdings in debt-free companies and a portfolio beta of 0.76, Solitaire continues to focus on quality and not momentum. The strategy's key exposures, FMCG, automobiles, financials and capital goods, provide balance between defensiveness and steady growth. And it continues to prove that investing in resilient businesses, even when they move slower, builds wealth more consistently over time. So if you would like to invest or know more about this diamond in the rough, get in touch with us today. Next up, we have TrueBlue, the large cap anchor. TrueBlue had a solid month, returning 4.03%, closely tracking the Nifty 50's 4.62%. Over the past 3 years, the strategy has compounded at 15.2%, and since inception in March 2021, it stands at a 12.2%. And since inception in March 2021, it stands at a 12.8% gain. TrueBlue's philosophy is simple: focus only on the best names within the Nifty 50 and avoid unnecessary churn. With financials at 43%, followed by automobiles and FMCG, the portfolio continues to benefit from stable leaders driving India's growth. A portfolio beta of 0.77 keeps volatility low, helping investors experience equity returns with reduced drawdowns. For those seeking large cap reliability and calm compounding, TrueBlue remains the steady hand in uncertain markets. So don't miss out on riding the blue chip wave with us. We're only a call away. Next up, we have Vriddhi, which is what resilience in small caps is all about. Vriddhi, our small cap strategy, ended October with a modest 0.3% gain, and it saw a lag against the benchmark. Small caps have faced valuation fatigue through the past quarter, but our focus remains unchanged, owning well-governed, fundamentally sound and niche businesses that can grow sustainably. Over the past 3 years, Vriddhi has compounded at 21.3%, and since inception in May 2021, it's up 21.7% CAGR. The portfolio is designed 55% in debt-free companies and nearly half in market leaders, ensures durability through volatility. With over 60% of holdings in under-researched companies, Vriddhi continues to find hidden potential that the market often overlooks. For patient investors, it remains a long-term value-creating opportunity. So get in touch with us today if you would like to start your journey with Vriddhi. Next up, we have Sphere, the power of balance. Sphere had another strong month, delivering 2% in October, while the benchmark NSE Multi-Asset Index 1 returned 2.55%. Over 3 years, Sphere has compounded at 27.9%, and since launch in December 2021, it has delivered 23.8% CAGR. What makes Sphere stand out is its disciplined asset allocation, a blend of equities, debt, global exposure, and over 20% in precious metals. This balance allows the portfolio to participate in equity rallies while staying cushioned during corrections. Sphere continues to prove that steady compounding is best achieved through diversification, not concentration. So if you're looking for smoother returns across cycles and geographies, Sphere is a strategy that's definitely worth exploring. Don't forget to reach out to us. And last, we have NEO, which we call a smart allocation for global Indians. NEO is another multi-asset PMS designed exclusively for NRIs, which also had a strong October with 2.88% return, comfortably outperforming its benchmark. Over 2 years, it compounded at 26.4%, and since inception, NEO has maintained a consistent 24.9% CAGR. The portfolio's mix, with 80% in equities and 11% in precious metals, continues to deliver both growth and stability. By combining Indian opportunities with a global perspective, NEO offers NRIs a simple, efficient, and resilient approach to wealth creation. So now that we've discussed our PMS strategies, with the markets near their all-time highs, it's tempting to chase momentum for sure. But at Ithought, we believe that this is a time for discipline and not haste. Quality businesses will continue to deliver, but selectivity will matter more than ever. As global uncertainty lingers and domestic earnings continue to strengthen, balanced investing remains the right path forward. So our PMS strategies, Solitaire, True Blue, Vriddhi, Sphere and Neo each represent a unique approach, but they share one thing in common: patience built on conviction. We continue to stay focused on fundamentals, protecting capital when needed and positioning for opportunities when they arise. And I thought we're not here to time the market, we're here to stay ahead of time. Stay tuned as we come to you with our monthly updates.